Is crypto dead? Here's the total rundown. The truth of the matter right now is there is roughly no liquidity in the crypto markets. But personally, I believe right now the best strategy in crypto is simply to dollar cost average into blue chips. This includes things like Bitcoin, Ethereum, Solana. That could be like XRP or ADA for you, but I honestly don't think those are going to do too well in this upcoming bull run. They're just not the narrative anymore. For me, it's about the plays that are going to trend in the future. This is things like Bitcoin layer 2s or tokenization of United States treasuries like Ondo. The reason for this is because when you look at the TIPP or the financial stress index, right now Americans are at a point where they do not have a lot of money to spend that is extra. They do not have extra capital. They do not have a personal savings. They barely have enough money to get by for their monthly expenses. In fact, the August report just came back. It's back up to 67.5 in America, no longer at 65.6, and is showing a steady increase. So this just shows that Bidenomics and what we're seeing in these upcoming elections is seriously having an impact on these markets. When you look at Trump's administration here, your average household had way more money. Costs of goods and services were down exponentially. And after COVID, it has remained high and continues to grow. You can see that statistic again when you look at the personal savings rate on Fred, where we are at a level that is really not been seen since 2005 to 2007. Of course, the lead up to the 2008 financial crisis. And you'll notice every time the personal savings rate goes through the roof, that actually coincides pretty closely to the beginning and then, of course, the end of bull runs or retail bull runs, which right now, up until this point, crypto has completely relied on this. This is why you had ICO bubbles in 2021 and 2018. Now we're in institutional games. So what I think is going to happen, and what I think is more than likely going to be the case, is until we know who is going to win this presidency, because it matters. The people out there that do not believe these elections matter are just completely ignorant, because the reality of the situation is whoever is elected is going to use their executive powers to put people into positions of power that are going to be regulating the crypto industry or doing things like capital gains tax or increasing corporate taxes. And so markets are heavily uncertain right now, as there's a very close outcome to both candidates. Both have about a 50% chance at this presidency at this given moment. So while Bitcoin could, because of institutions, and Ethereum, because of spot ETFs, see a pushback up to $70,000, the fear in the markets isn't going to change too much and be a point of entry that we've seen historically. Historically, it is great to dollar cost average when you're under the 20 points on the fear and greed index. That is extreme fear. When you're in extreme fear, that's when everybody else is generally running for the streets and generally near the, close of a bottom in the market. And you want to sell historically when you're above an 80 or extreme greed, when everybody wants to buy. Everybody says markets are going to continue higher and higher and higher. But what's different about this time is the liquidity. So yes, we can get short-term pushes, but for projects like meme coins, this is Duke here, or Brett, or Pepe, or really any altcoins. Seriously, any altcoins in general, all these VC tokens, TIA, or Say here, that are reliant on VC marketing to retail. That money is almost non-existent right now. And the only way we're going to get that money back is if we increase the energy production in the United States and we have positive and pro-crypto legislation within the US. And there's obviously only one candidate that's going to do so. So if you want to make money in crypto or even the stock market or equities markets right now, the only way you're really going to be able to do so in these times of low liquidity is by